Welcome to Tribal Finance Essentials, a virtual crash course for newly elected leaders in tribal finance. But for any business owners that are out there, know that I will be sharing information that's relevant to you as well. All right, thank you for joining us today. A couple goals of this workshop include to equip tribal leaders with skills and resources needed to improve tribal financial systems, as well as to connect and strengthen Native Nation networks to support each other in improving tribal financial systems. During this workshop, we'll discuss 5 key financial governance areas. And I call this a crash course because there will be a lot of information shared with you on each area, but I've also tried to include as much as I could in the workbook and slides so you have something to go back to for reference. We'll get started here with a couple of quick introductions. So this is Native Governance Center, a Native-led nonprofit dedicated to assisting Native nations and strengthening their governance systems and capacity to exercise sovereignty. We have 4 different programs, including community engagement, leadership development, tribal finance, and tribal governance support. I am Catherine Young. Excuse me. I am the Tribal Finance Program Manager. I've been working with NGC for 1 year, actually 1 year exactly today. I'm a member of the Prairie Band Potawatomi Nation. My education includes accounting and IT, and I've spent 17 years working with 5 different tribal nations. And I will pass it over to Sasha to introduce herself.
Hello, everyone. My name is Sasha Strong, and I use she, her pronouns. I've also been working with the Native Governance Center for about 1 year. My anniversary will be coming up in about 2 weeks or so. I'm the program coordinator for the Tribal Finance Program, and I recently graduated from the University of Minnesota Twin Cities, where I studied finance. And I've been here ever since. I'll pass it back to Catherine.
And we'll start out with a question. So why is an orientation in tribal finance important? It's important because if we go to the next slide, it's an opportunity for you to get an understanding of key financial governance matters. And if your tribal finance department actually provides it, then you'll understand the matters directly affecting your Native nation. And this goes for tribal managers as well, where it can be very useful for them to also receive an orientation in tribal finance, just because of all the different processes that managers have to work with. It can help. So we'll move into the first key financial governance area, which is financial reports. And we'll move into understanding financial reports, the importance of it. It provides a foundation for informed decision-making, effective resource allocation, and long-term strategic planning, all of which is important for your positions and what you need to do. Next slide. So we'll start with a question. Do you currently receive financial reports that provide useful, timely financial information for decision-making? So a couple of points to make here. Keywords useful and timely. So financial reports are only as good as they are useful to the user, and you are the user. So it's important that you can actually understand the financial information being provided to you. And timely. Timely is important as well. If you have a decision that you need to make and you have a limited time to make that, and you're trying to make that based on financial reports that are 6 months old, that's not going to be very helpful for you. So definitely keywords in here are useful and timely with regard to financial reports. So here are some typical financial reports. We have the income statement, we have a balance sheet, a cash report, debt report, capital report, and grants reporting. So I do want to bring to your attention that the names of these reports may be a little different from what you see or what you may see. The names on these financial reports that are listed here are based on financial accounting standards. and tribes typically follow governmental accounting standards. So you may see different names for the reports, but they basically provide the same information. So we'll go into the first one for income statement. And the income statement, this is the report that most people are familiar with. It lists your revenues, lists your expenses. Under the governmental accounting standards, you might see a statement of activities or a statement of revenues, expenses, and changes in fund balance. So that's what you might see with regard to an income statement title on reports. Otherwise, it's a lot of times just income statement. And we'll go to the next slide for an example. So here's an example of an income statement. We have 4 different columns. 2 of the columns are month to date, 2 of the columns are year to date. And it's always important to take a look at the column titles. That's going to tell you the information that you're looking at. So under the first 2 columns, month to date, we have month to date with a date of 5/31/25. And then the second column is month to date, 5/31/24. So this is providing you some historical data to actually take a look at the numbers and kind of see what they mean. Sometimes if you don't have historical data to kind of look at, it can be tough to get perspective of what those numbers really mean. And you have your normal, you have revenue accounts, you have your expense accounts. You'll have a lot of different accounts probably with your general fund for sure. And looking at the year to date, it's the same thing. It's just year to date. And we'll move into the next one. So here's an income statement, but it's actually a different format of budget versus actual. So if you look at the column headings, the first column is budget, that's month to date for 5/31/25, and the second column is actual month to date 5/31/25. And then the third column you're looking at is the difference. So typically when you're looking at revenue, it's a positive thing if you have more revenue than you had budgeted. And then on your expense side, it's typically more positive to have less expense than what is actually budgeted. So you'll just want to make sure that when you're looking at that difference column, what that really means, if it's better or not better. We usually try to keep the numbers positive if it's a good thing for the revenue, a good thing for the expenses, and then negative, but it don't always come out that way either. So you just want to kind of pay attention to that. And you may also see reports that have comparative numbers as well, where you have a number of different actual numbers. So you may have the budget versus actual, so you can see for the current year what that actually looks like. And then you may see other columns to either compare budget versus actual the prior year, or maybe just a bunch of actual figures to just give you an idea of what that historical perspective can be. Moving on to the balance sheet. Excuse me. So this is an example of a balance sheet. With governmental accounting standards, you might see a statement of net position listed. With balance sheets, you're not going to see a month to date or year to date because a balance sheet is as of a moment in time. So you're not going to see the same kind of columns or setup. Here are some of the different accounts that you would see in a balance sheet. So you'll see some equity accounts, fixed assets, accounts payable, cash, and some long-term debt. On the next slide here, we actually have a small example here as well. So you can see the first column here, 5/31/25, and there's a comparative column for 5/31/24. You have your assets on the top, your liabilities and equity on the bottom, and your total assets will match your total liabilities and equity. But you'll have different current assets, non-current assets, and the same thing with liabilities. Current liabilities being your accounts payable, non-current liabilities being any kind of long-term debt. And we do have a comment. Could we go back one? We do have Alexis Davis did ask, I would like to talk more on revenue. Is the budget section what would be assumed revenue made? That's the plan. So when you're coming up with your budgets, your plan is to have that much revenue. Okay, good. All right, we can move on. So the next report is cash. Your cash report can be different depending on how your tribal finance department actually monitors cash. So I haven't actually seen where a nation will actually use the official cash flow report that you would see in an audited statement. Excuse me. I have seen a lot of different examples of how that cash report is created, but basically it ends up using bank reports and bank accounts as far as amounts of monies that are there and what's available and what's available to actually pay your invoices. But cash can be dependent on how that's monitored. And it basically shows what cash is coming in and what cash is going out. Moving on to debt reports. So you may or may not see one of these reports. Debt reports, if it's requested, it can be if you have any loans or financing agreements. You may see a separate debt report that kind of lists all the different things that are required during the year and like when that's getting done, who is doing it, how where you're at with your payments. Have any of those payments been made late? Any kind of covenants that you have with any of your loan agreements as far as different ratios, financial ratios, and things like that may be included with debt. But debt is also talked about in the balance sheet. On the bottom part of that balance sheet is debt, and long-term debt was one of them. So it may just be discussed as part of the balance sheet and included in there, but you may also see a separate report that has a little bit more detail as far as where the nation is at with that debt. So if we move on to the next report, so capital, you may see a capital report. Capital, you're generally talking about land, buildings, and equipment. So it's your bigger purchases. And if we move to the next slide, here is an example of a capital report for the current year. Starts on top with just capital funding available for the current year, and then goes into purchases that are in progress, and then current year planned purchases. And this is basically just to keep council aware of what is going on with the different capital purchases and what that plan was and how that's moving along and keeping them informed. At the bottom, you can see that there's a planned $10,000 remaining, but that also assumes that none of the purchases planned for that year are going to go over their allocation as well. And sometimes that happens. So it's not necessarily a bad thing to have some funding kind of left over in case there are additional expenses that come with some of these capital purchases. And then we'll move into grants. So grants reporting, you may or may not see this one as well. It may include a list of all of your active grants. It may just include a summary by the awarding agency. Or you may just see a report on your 638 grants or contracts. So it really just depends on the nation. And there are challenges with grants reporting that we'll get into on the next slide. So part of the challenge is the software that's actually used to record grants. Can reports be created from that software? If they can, that makes it a little bit easier, but it depends on the accounting system that's actually used to record everything. Sometimes it can be difficult because you have so many different reporting cycles. So you have different awarding agencies that have different start and end dates. And so it can be easier to get as of like right now, how many grants and how much is available, but to try to regularly create some of these reports may be a challenge just because of the grants having the different reporting cycles, and maybe the software may not even be helpful in that respect. So we'll move into the next report, which is a tribal revenue allocation plan. So this is a financial report that you may see. I've heard it called a few different things, TRAP, TAP, RAP. So I just kind of included everything in here. Typically, I've done these at the end of the year to make sure that we are in compliance with our revenue allocation plan. If you go to 25 CFR Part 290, that actually has all the information for the procedures for submitting, reviewing, and approving allocation plans. And these are required by any tribe that intends to make a per capita payment from net gaming revenues. So if you're getting a gaming distribution to the government and you do make any kind of per capita payments, this plan is required. And so at the end of the year, I would typically provide a report to council to say, here's where we ended up, and just make sure that we're compliant with whatever our revenue allocation plan was set up for. Typically with your revenue allocation plans, it is best practice to have a percentage range for each area. So there's different areas in the revenue allocation plan where you can spend monies. And if you have a range in there, it's a little bit easier to stay compliant with that plan. Again, that's usually something that I just do at the end of the year, but it is something that can be looked at if there's any concern that can be looked at throughout the year as well. But it's not something that you're just going to go to an accounting system and run a report. Like that's not typically how these reports are created. It's usually more hands-on for the CFO or controller. We have some common abbreviations. So I have them all just kind of listed in here. They are also included in your workbook. So these are abbreviations that you'll see throughout financial reporting, month to date, accounts payable, accounts receivable, end of year, net income, year to date, prior year, end of month, capital expenditures, and cost of goods sold. So these are all included in your workbook for easy reference. And there is one more on the next screen for fiscal year. So fiscal year is a 12-month accounting period that an organization uses for accounting, budgeting, and financial reporting purposes. This year is very important as it relates to financial reporting because when you're looking at those income statements and they may say month to date or year to date, that year to date is based on a fiscal year. So it's not based on a calendar year unless the government's fiscal year is also the calendar year. So it is important to find out, if you don't already know, what your fiscal year is. So some common fiscal years ended is December 31st, June 30th, and September 30th. And ultimately, it just kind of depends on the, excuse me, the like operating cycle of the government or operating cycle of the business. Will kind of depend on what fiscal year makes most sense. So if you're a casino and your biggest revenue generating time is a summertime, you're probably not going to want to split up that summertime in the middle. You know, you'd want to have something more along the lines of a calendar year end so you can capture all of those revenues and all those expenses in one cycle. So that's your fiscal year. We move on to financial report tips on the next page. Just always check the date and time of the report. Pay attention to column headings And if you don't receive them now, you can ask for written highlights or useful visuals, depending on the information that's being presented. Sometimes it's a little easier to see a chart and kind of figure that out rather than just a bunch of numbers on a page. So don't be afraid to ask for that either. And on the next slide, we have a tribal finance tip. So when requesting your financial report or analysis, be open to answering questions about your request. So typically the questions that you're going to get are meant to make sure that whatever information that you're looking for is what you're going to get. There can be a number of different ways that data can be collected or recorded. And so just wanting to make sure that you get what it is you need to make the decision that you're trying to make. So just be open to answering questions. It's not meant to put you on the defensive or anything. It's just that we want to make sure as CFOs that we're getting you the right information that's going to be helpful. And we do have some reflection questions. But we'll let you go ahead and do those on your own. It is in the workbook. So the last 2 pages of the workbook are the reflection questions. And that is what caught your attention in financial reporting, and what is something you can do in the near future to enhance your understanding of financial reporting or of financial matters affecting your native nation.